Hi, I'm Ronnie from Veloris Capital. AI-linked stocks have swung sharply in recent weeks, and memory and storage names swing the hardest of all. They carry high beta, which just means they move more than the market, both up and down. On its own, that is uncomfortable, but it is not a reason to sell. We hold four of these names: Micron, SanDisk, Seagate, and Western Digital. We meet those swings with a repeatable, data-driven process. As of early July, our nightly risk system had about 49% of the account invested in what we call cruising mode. The picture on screen is only an illustration of that idea. Hold strong companies and let the risk system decide how much stays invested. So, what do these four companies actually do? Micron is the one true US based memory maker. It builds DRAM, the fast working memory inside servers and phones, plus the special high bandwidth memory that AI chips depend on. We have held it since December 2025. SanDisk makes NAND flash, the storage chips that keep data even when the power is off. We added it in March. Seagate and Western Digital build the high-capacity hard drives that store the huge data sets AI creates. Seagate joined in February, Western Digital back in December. Together, they cover the full chain, from fast AI memory to bulk storage. Here's the part that matters. In June, when the S&P 500 fell, these four were our largest positive contributors. SanDisk added about 2.3%, Western Digital 1.4%, Micron 1.3%, and Seagate 0.7%. Combined, roughly plus 5.5% in a down market. That is past performance, not a forecast. The real reason we hold these names is not the recent bounce, it is the strength of their forecasts. Let me put numbers on it. Forward earnings, the profit analysts expect over the next year, are set to grow between roughly 84% and 208% across our four names. For the broad technology sector, that figure is near 27%. Forecast sales growth is just as wide. Our names run from about 39% up to 144% against 19% for the sector. Now valuation, Micron trades near 6.4 times expected earnings, while the sector sits near 31 times. That low number reflects the market pricing in the memory cycle eventually cooling. Seagate, Western Digital, and SanDisk trade richer. Our screen applies no fixed valuation limit. It backs a higher price when growth and rising forecasts support it. Paying up is a genuine trade-off, and we respect investors who choose differently. These are analyst estimates, not results. Strong forecasts only matter if the demand behind them lasts. Here, the supply side is doing something unusual. It keeps getting tighter. The two largest memory makers in the world, Samsung and SK Hynix, are both in South Korea. Both are pouring capacity into fast AI memory, because that is where the best pricing is. Every wafer moved, there is one not making ordinary memory, and that holds prices firm across the market. Selling is changing too. The fastest AI memory is now booked years ahead under long-term contracts, which makes revenue steadier than in past cycles. NVIDIA's chief executive has said publicly that both this memory and networking gear should stay in short supply for years. We hold that networking side as well. Ciena, Lumentum, and Viavi supply the optical links that connect AI data centers. The image on screen is a stylized view of that tight supply chain. Owning strong companies is only half the job. The other half is not being hit too hard when the whole market falls. That is the risk overlay's role. Every night, the system recalculates more than 20 risk indicators and sets how much of the account is invested the next day. It is not a prediction machine. It does not claim to know where the market goes next week. It is time-tested to control drawdown, not to forecast prices. Today, it has us near 49% invested in cruising mode. Constructive, but far from euphoric. Now the honest risks. Memory is cyclical, meaning profits swing in large waves with supply and demand. Prices that rise on tight supply can fall just as fast, and these names are not cheap. And one limit matters. The overlay manages market-wide risk, not a single stock. If one name's demand story broke, two other defenses would handle it: equal weight sizing and monthly requalification. So that is how we aim to navigate this volatility rather than predict it. We hold memory for the forecasts, for the tightening supply, and for a process that retests the case every month. And we let the risk system, not our nerves, decide how much is exposed. Veloris Capital is a popular investor on eToro, and you can choose to copy the AlphaWizzard strategy. We do not manage anyone's money. If you copy, eToro replicates our trades proportionally into your own account, and you stay in control at all times. The links on screen show you how. One last important note: past performance is not an indication of future results. Your capital is at risk.